Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Wednesday the 8th of January. News out overnight, the Iranian response has been swift to the US killing of General Qasem Soleimani, and it's actually attacked some US-controlled bases in Iraq. Reports are that there are no casualties, and it's actually interesting that there's already suggestions from the Iranian side that if the US weren't to retaliate to this attack overnight, then we could well see a bit of a de-escalation of the tensions. Now, the likelihood is that Iran ultimately would continue to move through less sort of obvious ways through its proxy attacking maneuvers, such as through the Hezbollah and also in Yemen as well. But it's interesting that we've seen that there have been a significant reaction to markets overnight, but that reaction has unwound quite considerably. Look at this oil price. If I zoom in here, you can see WTI spiked high. That was around 4.7% higher on the day initially, and that move has been almost entirely unwound. Look at Treasury yields. The US Treasury yield actually on the 10-year around about 1.7%. It's actually unwound about 10 basis points from that low from earlier in the session. Similar moves actually through the 2-year yield, which is 8 basis points off the low. So we've seen these moves coming out, and risk appetite initially was being hit pretty hard, and gold actually spiked to 1610. It's now actually 1580, so it's $30 off that high on gold. And just I can go through all these markets really one by one, pretty much to suggest that risk appetite is sort of recovering quite considerably. The yen was much stronger, pulling dollar yen back to 107.65. That's now 108.45 again, so completely unwinding that move. And also we've seen how equities were quite strongly lower on the futures, but are actually now relatively well contained. That S&P 500 future pretty much, well, just a tick lower on the day now. European markets reacted initially on futures, but they are just marginally lower on the day, and it just seems as though that the Asian markets sort of bore the brunt of the selling pressure, but that has now pretty much unwound, and it's interesting to see if this is actually now a bit of a culmination of that selling pressure through markets, and the move into safe havens may now be at a tipping point back the other way. So in terms of where we're looking at today, we've got some data points this morning out from the Eurozone. Eurozone data for economic sentiment, industrial sentiment, services sentiment, all expected to tick a slight amount higher on the improvement. And let me just show you what that would mean. You can see economic sentiment rose last month. Another rise this month would be the first time of 2 months of improvement in a row since 2018 began. Similarly, on the services sentiment and industrial sentiment, sort of with seeing the potential for a sort of near-term bottoming out maybe of these indicators. So those indicators at 10 o'clock will be watched. Now this afternoon we've got the ADP employment, and it changes 160,000 growth in December. Now we saw 67,000 on the ADP number in November, but that significantly did not help us at all with regard to the non-farms number, which came out significantly stronger than expected. So we'll possibly be taking this with a pinch of salt, but how markets react this afternoon will be interesting. We're also looking out for Lael Brainard of the Fed. She is speaking at 3 o'clock, and she's a centrist on the committee, so let's have a look at what she says about inflation quite specifically. And that takes me on to my chart of the day, which is the Swiss franc. Oops, I've just noticed I haven't added in the support resistance, well, certainly not the support line. Resistance is in there. Let's have a look at that and talk about it. So we've seen just in the last, well, since December, the dollar's been under pressure, and we can see that throughout the major pairs. But interesting that we've seen this dollar Swiss level, coming back towards the 96.60 area. In the last week or so, that's been building as a basis of support. And look at the reaction that we've seen overnight. We saw the initial spike lower into the Swiss franc, but that is completely unwound. And the dollar Swiss is now trading up on the day. Now this is starting to turn a move at which we start to think maybe this is a recovery potential here. That would be a pretty decent recovery candle. You could argue a bull hammer on that move there, and possibility of testing that downtrend now, which comes in at 97.35. That resistance at 97.45 is the January high, which would, if broken out above, would complete a base pattern, also completing a breach of that downtrend. We're looking at the momentum indicators as well. RSI, if that moves into the mid 40s above the 42 level, that would be constituting a near-term turnaround and improvement. Similarly, look at the stochastics. They are sort of testing higher, which would be sort of 4 or 5 week highs. And also the MACD lines, are they about to bull cross? So it could be that this is a market that's at a crossroads, ready to possibly push over and go into more of a recovery play. But 97.45 is that key resistance there that we need to see the market breaking up. Yesterday's high, 97.30, will be watched. 96.60 was today's overnight early morning high, and 96.45 was that January. So 96.60 was the overnight low, and that January low of 96.45 is a pretty key level now. So some levels for you to work with, but I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.